Morning, Mesh. Oop, slow you up here for a second. Good morning, DCP.
Morning. How are you?
I'm good. How's it going by you?
It's good. It's good. It's finally starting to turn into spring in Chicago, so that's a good thing.
That is nice to hear. Glad you're having some good weather. All right, I see some more coming in with us here. Slowly getting started. Interesting morning coming off of those earnings. Meta up real big this morning. We all saw them kind of blow out those. Well, blow out is a strong word. The stock certainly blew out. About up 15%. Tesla still tricking a little bit to the downside. So there's definitely a couple of things that are going on here this AM. How's it going, MTZ?
Excellent. How's it going? And spring is here in Seattle. It stopped raining a bit, which was great. Pardon me. It's going well. It's an interesting markets. A few carrying the boat.
Very nice. Good morning, Kim.
Good morning. How are you?
I'm good. How's it going by you?
Good. I've been a little bit under the weather, but excited for the spaces and to hear everybody talk about their past floor experience. Obviously, I wasn't on the floor, but I love futures and I'm married to a previous floor trader. So look.
Got it. All right. I see we got Mr. Top Step up here. How's it going?
Hey, what's up, Wolf?
Good. What are you looking at this morning?
I mean, we've had a 90 handle sell off in the S&P in 2 days. We haven't seen anything like that for a bit. I was kind of pointing out yesterday that I think a lot of the weakness was coming off this regional bank stuff, and the earnings have been good, especially on the tech side. So, I think the bounce was overnight is probably not over. But there's a lot of trade that happens on the open. Some people may try to sell the open, but I'm a buyer of weakness today.
Okay. A buyer of weakness at the moment. Any specific ticker standing out?
I mean, everybody's looking at the same stuff, right? I mean, what is it, like 9 stocks that are making up most of the gains this year? And obviously, I've been working with Marty Schwartz for a long time, and back about 6 or 8 months ago, he told me that he thought Microsoft was going to be one of the best performing tech stocks, and so we pay a lot of attention to Microsoft. And I'm not really in tune with Tesla as much as some of these other names like in the tech sector, but you know things don't look all that bad considering. When this thing will catch fire on the downside, I don't know, but I still will go back to what we talked about when I first came on. I think there's just too many problems out there, and we haven't even started to touch that commercial real estate thing yet. So, you know, and I also don't think the Fed's. I think there's a real possibility. The Fed raises, into this next meeting, and I know people will say boo to this, but I think there could be more rate hikes coming behind it. So I don't know. You know, they look good, but in the long run, I still think there's more downside here.
Got it. Understood. Okay. Appreciate your initial thoughts this morning.
You got it.
Stock market news. You want to run us through some of the news this morning?
Yeah. Good morning, everybody. Excited to be here. Excited for another day of craziness. We had Q1 GDP. The preliminary reading for that came in pretty well below the median expectations. Came in at plus 1.1% below estimates of plus 2%. The Atlanta Fed's GDP Now forecast, though, did move down very quickly over the last couple of days, but it did come in at plus 1.1%, so they were right in there. So GDP below expectations. We'll see how that develops. Also, I saw a tweet from Neely. The Fed estimated that they think GDP will come in at plus 0.4% for this year, which kind of hints at a deceleration throughout the year. At least that's what the Fed is expecting. So definitely GDP to keep on watch as we go throughout the year. And then we had a bunch of earnings this morning. I don't want to just read out a bunch of numbers to you. Overall, still a lot of beats, but it felt a little bit like a more misses than some of the last ones. So the last couple days of earnings had somewhere like 75% of companies beating expectations. My guess is today was closer to 60%. Caterpillar was a big one, EPS of $4.91, beating expectations of $3.78, and then revenue of $15.9 billion, beating expectations of $15.26 billion. And then let me find one more to read out. I'll go with Merck. Merck EPS was $1.40, beating expectations of $1.32. Revenue of $14.49 billion, beating expectations of $13.79 billion. We also did have Meta earnings after the close yesterday, of course. It was up about 10% most of yesterday, and it did move higher. It's looking to open trading up about plus 15% on the day. Of course, myself, Wolf, we've been doing a lot of stuff with Roundhill, their Big T ETF, which just holds Facebook, Apple, Amazon, Microsoft, and Google. Should be up nicely today with one of the 5 holdings up about 14%. So Big T, definitely looking at that one. And yeah, we could break out some of the Facebook earnings maybe a little bit later and talk through them. And I know we have Amazon earnings after the close, so that is definitely something to keep on watch. But yeah, that's most of the news from today. Oh, you know what? From last night, Kathy Wood also bought a lot more Tesla again. So shout out to her, giving the price target and actually buying this time. Instead of I feel like last time she gave a big price target and sold the next day.
All right, nice little run through there. So we should be getting joined by Elite Trader Funding. We'll have to kind of see what happens as we make our way through the morning. I'm going to drop them a DM real quick and see if we can get them in here. But for right now, we do have a fantastic group. Uncle Pac, I see you in the audience. If you want to go ahead and join up as well. Mish, I see we got you on stage, so I'd love to turn it over to you to get some of your thoughts on the market today.
Hey, good morning, everyone. Kim, I relate to you. I'm also a little under the weather, coming back from the money show with a cold. But anyway, basic thoughts on the market really have not changed very much. I think we're in a classic stagflation environment. You had PCE numbers surprisingly up today. Well, surprising to some. While the GDP is down, that's the classic definition. The question, of course, is going to be how much more inflation and how much more economic contraction. And that really, to me, means that we may be, I wouldn't necessarily say peak inflation because we know anything could happen, but I think that the rate of acceleration of inflation will not be what it was, say, in 2021. And I feel the rate of contraction won't be as significant as it is right now, as these numbers are sort of more looking back. And so this all to me supports kind of the trading range that we started out this year believing. And there's been absolutely no reason for me or our team to change our mind about that. What's the biggest interesting, if we step back and zoom out a little bit, is the business cycles. And we are in a 2 to 3 year business cycle within a much larger cycle. And these 2 to 3 year business cycles have happened very often in the past. But this one right now has been an interesting place, or a compass, I should say, to determine what is doing better than others. And there are certainly areas of the market that are doing better than others. All the indices, except for the Dow, are underneath this 2 year business cycle. Semiconductors were above, now they're below. We'll see what happens over the next couple of days as the month ends. ITB, which is home construction, has been above. Utilities have been above. Staples have been above. So to me, what this really tells you right now is that the commodities, by the way, still above. Not all commodities, but DBA, GLD, SLV, obviously sugar. So really, I think that this is going to continue to be a hard environment. There'll be individual stocks, as Mr. Topstep said. These 9 stocks, these tech stocks, are pulling everything up. Question is, at what point? The earnings are definitely reflective of what they may be really worth now. The question is how much more bloated can they get? Can Meta take out 250? Can Amazon, not Amazon, Microsoft take out 300? What happens with Amazon? I would imagine it'll report relatively well. So, these heavy lifting stocks can only heavy lift in so long as the rest follows. Otherwise, they'll get to a point where people will sell because they'll be trying to raise capital to pay for some of the other stuff. But that's probably jumping ahead of myself. For now, we're just sticking with buying the dips in some of the commodity areas, watching that sugar continue to go parabolic, watching the food inflation, and watching this persistent trading range. And if the spies can actually get above 420 or the Qs can get above 330, maybe new ball game, and it'll defy all of the people who are predicting major recession over the next year. To me, it'll just predict more trading range.
Okay. And Mish, thank you for joining us, even under the weather.
Thank you.
Appreciate it. Okay. I see we do have the Elite Trader account coming up with us, so excited to see that. Still dropping Uncle Pac a couple of invites if you want to grab those at any point here. And to Elite Trader Funding, we've got someone new on the account today, right?
Yeah, this is Clint. Eric's not available today.
Sounds good, Clint. Would love to, maybe hear a little bit about you for a minute or two and what you're doing over at ETF and some thoughts on the market here.
Well, ETF, me, Eric, and Con started that because we were decent traders, but not as good as we thought. So we figured we'd find other good traders. But at ETF, we're just constantly building right now, trying to create new ways for traders to get into the market without having the capital to do so. But right now, I agree. I think it's a buy the dip right now in the S&P. I think the selling has kind of gotten a little bit too much for the past couple days, and I think once the bank stuff cools off, we're going to see a pretty good pop.
Understood. Anything specific you're watching out of the open?
Kind of just the big seven right now. Facebook, Meta, Amazon, Apple. Going to see if they start a pre-earnings run for next week. And I tend to watch the 15-second chart on ES for volume anomalies and the 30-minute chart for major levels, and I trade based off of that.
Okay, got it. And I know that you guys have been running some deals. We've got a 30% discount up there today, right?
Yeah, there is a 30% off for people listening in on Wolf. We are going to have more deals coming up. We're going to start some giveaways on Twitter, so make sure you follow our page for that. We're going to give away some free accounts and try to get some more people some accounts.
Sounds good. All right, thank you, ETF. We got still a couple minutes to the open here. We got Uncle Pac on stage. Would you like to hop in here and share some market thoughts? You'll just need to unmute, Pac. I had to mute you for a second before. We were getting a lot of feedback through your mic. But if you are able to tap that unmute button, you're good to go now. We'll give it a second for Pac. Yep, there we go.
Hey guys, what's happening?
Doing good. What's going on by you?
Oh man, I'm actually traveling the road from Disney World, man. So I'm working overtime for you guys.
Appreciate you making it happen. I thought some
So,
market you shared.
yeah, pretty much agree with what everybody has. And let me know if you can't hear me because I am on the road and I apologize. And I'm actually going beside a policeman right now. So anyhow, but no, the thing, it reminds me of February 2021, where you just basically had the generals leading the market and everything else was getting wiped off under the table. I was looking, and I have not spent this week looking at the screens like I normally do, but I did get in last night and see some stuff, and you've got a lot of stocks that are breaking down, other than your FANG names, and it's the way they've got the market rotating right now. I forget who just said it, and I think we all kind of agree on that. To me, the market has the 2001 to 2005 feel to it, where we're going to be in I think the range will broaden. Yeah, I think we will break out, but I don't think it's going to be some melt up move. And it could be. I mean, I always reserve the right to be wrong. But I think you go back and look at the September and October lows. You go look at highs. You got about a 700 point range in ES, I believe. Right now, this is all. I mean, to me, most of these stocks you like Meta. I mean, all we've done is lowered expectations for a year. And hey, what lo and behold, we finally beat them. We're doing good. No, it's the laws of diminishing return here because of uh, Meta or Facebook, whatever you want to call it. They lost $4 billion. I mean, like they're and we're rallying 10, 15. I think all of it. I think the Papanese are liquidity. They're liquidity driven. You'll look and see most of the time right now. If you go look at the registration statements, you'll see that insiders are dumping all these stocks as hard as they can.
I think Top Step got a little excited.
Sorry about that.
Okay, all good. We're into the market open right here. Thank you, Pac, for joining us on the road and sharing your thoughts with us. DCP, let me touch back with you. I know that I know that part of today is we want to kind of do a little bit of live trading, a little bit of talk on the market off the open, and then we had a bunch of questions we want to hit. I'm glad we were able to get a little bit of a smaller panel so we can give everybody more time. I do believe there were several questions that I'm going to go ahead and try to pull up. But for right now, just kind of rolling into the market. If anyone has initial thoughts off the bat or is planning on taking any trades, we would love to hear that. And then, we do have a bunch of questions about trading in the pit, and we can get into those in just a few minutes. For the audience, as you're here with us today, you've got a lot of former pit traders, a lot of experience up on stage. So definitely recommend scrolling around the panel, checking out everything that they're doing. If you are interested in trading futures, you're going to want to go ahead and check out the link in the top of the space. That's where you're going to get, I think, a lot of what you need in regards to guidance, potentially funding, and the ability to actually learn how to do this without blowing up an account. I've got a link pinned up there that's going to lead you through what you need there. There is a big discount applied on the final page if you pick package. With that being said, DCP, let me pull it back to you off the bat this morning. I'm looking at ES, but kind of flat coming out here. But we do have a lot of big tech up because of those earnings.
Yeah, I mean, I agree with Uncle on just the deceleration of expectations on the earnings side. I mean, it's hard not to beat when you've reduced for the last year and a half. So I take that with a grain of salt. I'm more looking at the yield curve. If you go back to February, the expectation was 2 half-point rate hikes. Then the banks blew up. Then it was cuts. And now it's back to priced exactly where it was in February. But we've seen a lot of volatility in that market, and it seems to be stabilizing a little bit. So I think we're stuck with a stagnant market where you buy the dips and you sell rips. I mean, I still think we're range bound for a while here. I don't think that's going to change.
Understood. Okay. Sitting in a little bit of range. Kim, I'd like to pull you back in. I know that you pretty actively trade off the open. Would you like to throw some comments in here?
Well, if I wasn't sick today, which I am, like Mish had mentioned, both the ladies a little under the weather. I mean, these are the mornings that I know Danny said, buy the dip. Danny's Mr. Top Step said buy the dip. For me, and I haven't really looked at it, like I said, because I'm under the weather today. I like selling that morning rip. I don't know how much of a pullback we'll get, and I'm not recommending that anyone do this, but that, the NQ gapped up pretty significantly, I think. What was that, up 100 points? So, but that doesn't mean, like Danny said, by, midday or whatever, that it's not going to keep going with these tech, because someone mentioned Amazon coming out tonight. So I imagine with the big tech having good beats that they'll run Amazon today. And someone else had mentioned maybe they'll run Apple into its earnings. So that's usually what I like to do, is sell the gap opens. I'm a much better seller than I am a buyer. So maybe Danny can rub off on me. I like selling when we have big gap opens.
Hey, Mr. Top Step here. Yeah, I trade the opens quite often, and if the gaps are significant enough, and sometimes they aren't, maybe they're only 5 points up, maybe 10 points up. Um, I like trading the gaps, and that's if you hit that morning trade like that, and it starts out your day on a better note, and that's really where most of the movement comes in. I've got a trading rule that I think everybody will agree with. That I always say that there's three trading sessions to the S&P. There's what happens on Globex. There's what happens after the 8 or 9:30 futures open, and then there's what happens in the final hour. And I kind of try to trade it that way. And I agree with what Kim said. I think that if the futures rally early in the day, um, you could look for some kind of pullback. At some point, you got to be really patient with this. I tend to go too early, but a lot of these highs come in after 10:30, 11 o'clock into your 11:30 time frame. And yeah, I like selling those rips. And then obviously with the way the price action's been, with the exception of the last couple of days, I look to buy those kind of late day weakness or late day pullbacks, and then wait for the imbalance. Now we're very, very big on the imbalance, and we have a meter that gives the New York Stock Exchange imbalance every day, and I think everybody knows I post that. So we kind of trade around that depending on what we're seeing on the imbalance.
Sounds like an awesome strategy. MTZ, I see your hand up.
Hello. Yeah. First, a couple of things. First of all, Danny spoke about. It's on. First of all, Danny spoke. Can you hear me?
Yep.
First of all, Danny spoke to him and Marty Schwartz, legend, about Microsoft. And as I said last time, we live in Microsoft land. I was on a field last night for tryouts for the youth academy I work in, and let's just say they're doing well. Digging a little deeper, I work one-on-one with players, and one of the kids I work with, his dad is part of the AI program, and I'll just say it bluntly, he couldn't be more pleased with what's going on. So I know that these stocks are carrying the weight, but if you look at the earnings, they're carrying the weight. So Danny's spot on that. Number two, as far as looking at numbers, and I tweeted this, and you guys do a lot more research and homework than me as I'm on the field. You still haven't taken out your weekly highs on the NASDAQ, NQ, I should say 130.70, ES 41.50, and the RTY, which are the three I watch, 1797.30. So as great as this has all come out, you still have a red candle on the week. The opposite of that is for me, and I watch Danny a lot. I am watching you guys a lot, reading what you're saying, as you're heavily involved. The old adage of don't sell a quiet market is kind of holding true here. So that's my feedback.
Okay, perfect. Thank you for that rundown there, MTZ. I want to real quick bring in Pax to get your thoughts on what's going on in the market, and we can talk about that.
All right, good morning, everybody. Sorry I'm a few minutes late. It's been a harried morning. I don't know. I don't have any real thoughts on the market. The 40.99 to 41.01 in the S&P is a big area for me, and it's a decent size area for me. So yesterday I wanted to be short underneath it, and I wanted to be long above it. We broke yesterday. The algorithms do the same thing that I used to do on the floor, that we traders on the floor used to do. They the algorithms now are they're trying to create profit for themselves, in a myriad of ways, same way we did. So yesterday they tried to break the market. We went down to 68.75 in the SPOOs, and I covered my covered shorts down to 78. and then scratched out the balance this morning. It was a good day. So I'm expecting today. I'm expecting the S&P to do a similar thing, but to the upside, a similar swing to the upside. The algos tried to break the market yesterday. They couldn't. They came back to the yesterday's opening range. We opened in the same spot. So I'm expecting an equidistant swing to the upside today. If we don't get it, the market is trying to rally now. If we don't get that small rally up to, I don't know, 41, back up to 41.30, 40, if we don't get that, then I would think that the market is just going to kind of sit. What's interesting to me is the relative strength of the Nasdaq. The Nasdaq is much stronger than the S&P. At least on the dailies. Yesterday's opening range in the Nasdaq was 12,940, while the S&P opened here. So the Nasdaq opened 100 handles higher today than it did yesterday, while the S&P is still stagnant. So is that an indication, to me that the S&P is going to follow suit, that the Nasdaq is leading to the upside, or is this something kind of like COVID, where the market is setting up for a major downside move? The broader based index is setting up for a bigger downside move. So some money is pouring into tech as kind of a safe haven. I don't know. I don't really care. I'm a blue collar trader, and this is a marathon, not a sprint. So, two cliches that I use a lot. So I'm going to trade my process, and I'm going to trade my methodology, and I'll take what the market gives me, and I'll be satisfied with it. And I'm not going to force trades. Most traders force their trades. Great traders are forced to trade. Another cliche that I learned years ago on the floor. Most traders force their trades. Great traders are forced to trade. So that's it. I really don't have. There's nothing truly, besides the relative strength of the Nasdaq. There's nothing truly interesting in the price action to me right now. We've got all of the GDP, just earnings and economic releases this morning, the jobs stuff and GDP, and market digesting, and bonds are getting whacked. That's important, and gold is down a lot too. That also is important. So you got the bonds getting smashed, and you got gold getting smashed. What does that do for the SPOOs? All right, I just got short 99 quarters in the S&P. So let's see where that takes us.
Perfect. Yeah, Pac?
I'm sorry.
Yeah, I was
Okay.
like, what did you say, Pax or Pop?
I saw you unmuted, so I was going to you.
Okay. Am I okay to speak? I need to be quiet.
All you?
No, I mean, like, I was listening to what Pax was saying. Pax and Pax. That's how we can be rappers. Um, Nobody's paying attention to the transports. And I'm old school. And, I had back when I was starting a long time ago, if the companies that move the products are not doing good, nothing else is supposed to do good. And I know that's old school, but I mean, and the transport's lost 1,000 points in the last 2 days, and everybody's sweeping it under the rug. Pack just said ES is underperforming. Even though, and I'm like I said, I'm driving right this second. I know that the Qs last night when I went to bed, I know Meta had this. The Qs basically had an inside day. Now, something that talking about the strength of the Nasdaq, I did notice on the dailies as the Qs closed below its 8 and 21 for the first time in like 2 months, and now I think we're going to break back above it. Now, I'm not saying it's not going to shoot off and just keep rocking here, but like Pac said, we all trade the process, but I just think it's just interesting that nobody pays attention to the transports. And you got the Russell, it's in a bearish formation. You got, if you go back and look at the transports are down 2,500 points since early February. Whether or not, most of the time, all this stuff eventually comes back. You usually don't have this kind of spread and these kind of things. So anyhow, I think the Nasdaq can continue to rally because you got the tech stocks that's probably going to do good, and it reminds me of the selling we had in 2021.
Did he mute or is he done?
Yeah, I think you muted. Okay. All right. We're at 9:45 a.m. Pax. You got something there?
No, I'm sorry. I think I like what Pac said, Uncle Peck. Uh, I this is just a really nothing day, and I can get killed in nothing days. That's where I get destroyed. If the market rallies, I'll be long. If the market breaks, I'll be short. If the market does nothing, I can chop myself to bits. So, I'm a momentum breakout trader. I've taken a couple of trades. There is no momentum and there is no breakouts. Meanwhile, we've got a lot to look to and we've got a lot to watch that will lead to some movement in the indices. It's just not happening right now.
All right. Well, then let me start out with a couple of these questions real quick, because I know that we have a bunch of former pit traders up here, and we wanted to get some insights from them. Before I go into that, I want to give a big thank you to all of them for joining us on stage today, and shout out to Elite Trader Funding for curating the panel, reaching out, we're working the connections. If anybody hasn't already checked it out, if you're in the audience and you do trade options, you probably feel the pain. Seems like, either the stock goes in the wrong direction or it doesn't go up fast enough, right? It's even when you predict it, often that you can run into problems with theta decay, with IV, especially during elevated times like earnings season, FOMC, right? That we're in the thick of right now. So why are we here trading futures? This is a way to get similar style volatility, to get big moves on small amounts of capital, right? But not have to worry about, hey, if I sit in this trade for 15 minutes and it doesn't go anywhere, I'm going to be losing money. You don't have to worry about the theta decay. You don't have to worry about the IV. That's the transition here. However, at the same time, if you were just to go in, drop thousands of your own dollars, you probably are going to struggle off the bat, right? You need to learn the process. It's not the same as just trading a stock. It's not the same as just trading an option. There's a different rhythm and rhyme to it. So that's what we're doing with ETF, is bringing people into this ecosystem. If you scroll to the top of the space, and if you can't see it there, if you're on desktop, just go to my page and look at replies, and you'll just see it underneath my last replies. There's a link up there to the ETF website. They have built out this wonderful simulation that allows people to hop in there. Usually it's just 30, $40 to try out the simulation. So you do have some real money on the line, put a little bit of thought into it, right? A little bit of sacrifice, and take a whirl on the simulation. And if you are able to provide good returns, and we've seen people in our spaces do it in 2 to 3 weeks, they're actually going to be able to fund your account to trade futures with. So you are never really having to put up all that capital of your own money. And of course, then you're keeping a majority of the profits after that as well, but trading with their funded accounts. So there's a big discount to that simulation that's built in the link up top. Once you get to the checkout page, it'll just show you it. And take a look. If you're interested in learning about futures, this is the way that majority of the successful future traders that I've talked to recommend beginners start out, rather than just taking 10 grand of their own and dumping it into the futures market. Clint, did you want to add anything onto that before we roll around and get some of the pit traders' thoughts?
No, just that exactly what you said. I mean, before we started ETF, I was one of those people that uh, went in with my own money at first, and I was all excited because I went in with like 3,000, and I had this big win and didn't know much about futures trading. I think I got up to 15,000. Didn't close my position or have a stop loss, and lost all 15,000 overnight. So then learned a lot about how to manage risk and stuff, and we built a lot of that into uh, the program at ETF. So it kind of teaches you that right away, so you don't have to take that major hit to the gut with your own money.
There we go. Cool. So with that being said, and everybody going ahead and checking that out, we're going to talk to some of the pit traders that are up here and get some of their thoughts here, which will be great. So I'm excited to hear from them. Maybe we could start out with yourself, Pax, if that would work for you, and kind of work around from there. I was just curious, what were the biggest rewards of trading in the pit?
The biggest rewards of trading in the pit, there was a million of them, or 50 million of them, depending on how good you were. The
Do you actually want to start out by, to our audience who just don't even understand what a pit trade is, maybe explaining what that is?
For 150 years, the trading was done in an open outcry fashion, and which is a bunch of people standing around making trading with one another, and the the trading was done in a pit or a ring, where brokers, order fillers stood on the outside of the pit, and independent traders stood on the inside of the pit, or traders for funds, banks, and things. I was an independent trader. I always traded my own accounts. I still do, and I started on the floor of the Chicago Mercantile Exchange, and I worked my way up until I earned my shot at trading. To be a pit trader, you needed you, it, there was I don't know when I started in 1997, you needed at least $100,000 for a firm to want to clear you, or you needed somebody to back you. I had the guy that I had worked for many years in the Eurodollar pit as a clerk had backed me. Steve Mendez had put me into the pit, and I chose to go into the Nasdaq. So I mean, it would take me probably 30 minutes to explain pit trading. Maybe somebody else can do it more succinctly than I can. Uh, I'm but
I think that was good. If you want to talk to the benefits, I'd love to hear them.
Well, I think one major benefit right now that comes to mind is I had the ability to be able to learn from some of the best traders ever, without them really knowing that I was learning from them. I can, somebody can tell Donnie Phillips and I, DCP and I, have known each other since we were clerks in the '90s, and I think Donnie would agree that DCP can tell me, that guy right there, Pat Mulcrone, is a great trader. And I wouldn't know anything, but I can watch Pat Mulcrone, and then I can get to know Pat, and I can ask Pat questions. I can learn from him. I can watch him. I could tell who was real and who wasn't. Nowadays, I have no idea how you guys do it. I remember when I was a runner, somebody had told me that Louis Borsellino, who was a very famous pit trader in the S&P, had made $1 million in the crash of 1987. And I thought to myself, there's no way that an individual person can make that kind of money in a day. But I was able to watch him, and I was able to learn from him. And, eventually I learned that a trader, an independent trader, can in fact make $1 million in a day. Especially, it was easier in those days to make that kind of money. There was just a lot of different, the ability to, and I'm sure somebody else will talk about it, but the ability to be able to feel the energy and the roar of the pit that everybody talks about. When something, you'd be standing around talking about baseball or your kids, and all of a sudden somebody would roar, you knew something was going on, and you could jump into the pit. So I think being able to learn from some of the world's best, and to be able to tell who was real, who was a faker, who was ego, who was a show off, those traders didn't last very long. You can learn from them. That was a major benefit. Another major benefit was that it was a lot easier to size up, a lot easier to size down on the floor than it is on the screens. I became a big trader because the volume in the Nasdaq started to grow. And I was, if there were 100 lots and plus flying through the pit, it was safer for me to trade bigger size. And if I traded bigger size, obviously I'd make more money. If the market was quiet and there was no order flow coming through the pit, I can see that, I can hear it, I can feel it. I knew that I knew that nobody really was doing anything. Well, neither would I. And it was easy for me to make those decisions. Now it's difficult to make those decisions for traders, to be able to see who's real and who's not, I think is a difficult thing. And also to be able to say in a market like this, I'm going to size down or I'm going to not trade today, and to be okay with that is a little bit more difficult than it was on the floor. I think that some of the other guys will have a lot more to say than that. I feel like I'm scattered a little bit, but those were two very big things for me. And because it was easier to size up, size down, and not trade, it was obviously then easier to make a lot more money than it is. You've got to have, nowadays you have to have a trading methodology, strategy, or process that is consistent, repeatable, and scalable. And once you find that consistent, repeatable, scalable methodology, then you have to learn the strengths and weaknesses of it so that you learn how to increase your size, decrease your size, and when not to trade. That's the key to a long, profitable career. Not how many trades you catch, not how many wiggles on a chart you're able to trade, or how you scalp the noise. That's not the key, although most traders think it is. That is not it. The key is knowing when to increase your size, decrease your size, and not trade. That's the most important. And that was easier, much easier on the floor.
Love the rundown. DCP, you want to pop off that?
Yeah, I'm kind of going back to the floor period, and I was in the Bills in '85. This is I was in the Bills in '85. I started trading in '86 and started filling orders October before the crash. So I was filling T-bills and TED spreads, and I literally made $125,000 in 10 seconds on the day of the crash. And then I proceeded to get my ass kicked over 2 years. And that's when I gave up my seat and went back into the Eurodollars to clerk. And then I brought the Solomon Brothers business to PJM, Pat Mulcrone, and Pat rewarded me a year later by funding my account. So I went into the back months with 50 grand cash and his guarantee on my seat. And I was trading in the third and fourth month Eurodollars, kind of right as the whites and the reds were starting to really gain traction and people were really specking out the calendar spreads. And I had a spot where I was literally in the old pit before they did the last conversion, the last renovation of euros. I had a spot where I could look at both sides of the trading floor because the Eurodollars were two-sided trades. There was desks on both sides with the pit in the middle, and the pit was elongated from fronts to backs. And in that location, I could see everything. I literally had the best vantage point in the Eurodollars that nobody wanted before I took it. And I could watch Solomon Brothers put in orders. I could watch Witter lift an offer. I could watch every trader on the floor from the backs all the way up to the fronts. And I had complete awareness of what was happening in the marketplace. So for me, I could watch the market turn. I had the bond screen right in front of me. I could watch the 5-year and the 10-year move. And I had instantaneous feedback. And all I had to do was be fast enough to execute and not be stupid. The hardest part for me was not being stupid, right? Taking too much or too little of a trade at just the right time. But the difference between what you could do on the floor, you knew where the size was, right? You knew that there was 5,000 to buy at 10 or 10 and a half or 11. And if you could get long into that range, you could lean on that bid because I could get out faster than the orders could come into the pit. Off the screen, you have no idea who's selling. You have no idea what volume's really hitting the pit, and you have no idea when it's coming. So that edge was the hardest thing that I lost when I went off the floor. So now you're looking at wiggles. Now you're looking at charts. So what I found worked for me was to use a tick chart. And I put as much data onto a tick chart as I can. And I use simple 1330 lines on simple moving averages with momentum. And I fade the breakouts. If I get a rally and it fails, I'll short it. If I get a rally and it keeps going, I'll add to the long. And I'm really not trying to make a market call. I'm really just trying to trade the price action as it exists. And that's really hard for a floor trader to make that conversion. I did it in 08, 09. After I was in MB, I left the floor and went into mortgage-backed securitization. And then that, we all know how that blew up. And then I took it all and went and just started trading on the screen at home. I knew the floor was done. I wasn't going back. The Eurodollars were at 0% interest rates. There was nothing for me to trade there. And I wasn't going to go into the NASDAQ pit because I had never traded that market, and it would have been suicide for me to walk in there after being off the floor for a couple of years. So I had to learn how to trade off the floor on screens, and it took me a couple of years. I made a couple of really big annual donations to the market trying to figure this out. And what I learned was you just got to try to trade the momentum and the false breakouts, or catch the news if you have, in February, I knew the market was overpricing bonds, and there was no way we were going to get a 1% rate hike. So the market was doing it, and then we got that bank breakout. As soon as the banks failed, I jumped in and bought a bunch of SOFR because I knew it was going to be a flight to quality trade. That's an event trade. Those are really rare, but those are usually the most profitable, and for me at least. I hope that helps a little bit.
Yeah, that's an awesome rundown, BCP. I appreciate you sharing a lot of your experience and insights with us. Definitely to those in the audience, if you're looking for knowledge and experience, you found it up here with our panel. So make sure that you are following them. MTZ, want to pop in here? I see a hand up from MTZ, but you just need to unmute if you'd like to speak.
Okay, sorry. Number one, and Danny just DM'd me. He's trying to get in, so if you can look at that. I wanted to speak to the pit since we're talking about the floor. The edge. The edge was huge. For my career, I was spent majority of the time running a trading desk. So the pit I always refer to as Dante's Inferno because the higher you got to the top step, there's Mr. Top Step's logo, the closer you were to the order fillers. We controlled a lot of flow through Bear Stearns. We cleared a lot of people. We had our program trading. So you had your order fillers on the top step, and I'll pull out some names here that'll bring back some memories. Paul Carbonaro, Brian Cooley, Jimmy Place. Jimmy Place, I think he had a high school degree out of New Jersey, and I never saw someone that could do numbers faster, do 9 things faster than Jimmy Place. Bobby Galt, who was on the other side with Jack Bajorjian and John Skarnovac, who used to work with me. So the lower you went in the pit, the more you were in hell. The better you got, the more respect you got, the more you worked with we were trying to execute orders, so we had to give up the edge. I had Wally Posner, and I talked to him a year ago when I was in Chicago, filling our orders. And for us, it wasn't as much, and this is where the floor, he's so right, drastically changed. If I came in with 700 contracts to sell, we weren't worried about 3-4 ticks. We had to execute the order. Our trading desk took off the debacle of long-term capital management, and that was just trying to end a mess. But as these locals that are on this call and true traders, they're really true traders. I don't think, it's a known. You'll never see the likes of a Pax or any of these guys again because they would swallow risks that I don't know. You couldn't do it off a screen, in my opinion, but I don't, as he said, you can't see who's trading. You can't see Mark Metzger walk up to Wally Posner. You can't see Danny going into mode and going, something's going on, or look over to the left of Danny and I, and all of a sudden Paul Tudor's desk is just chiming out orders. To the left of him was Goldman Sachs. To the right of Danny was JP Morgan. So that was a true fact. You want to disguise what you're doing, and Danny did some of our business because if it went through him, you didn't know it was Bear Stearns. But these true traders in the pit, as they got better and better and more respect, and there were certain icons, whether you like them or not. I mentioned Borsellino, and the ones in front of Wally was a guy named Mike Walsh, and the guy I filled in the pit for 2 years. I'd never seen anybody like this. He had no pulse. What was his education? He was a fireman. I never saw somebody that took down so much risk, and he didn't flinch. So as you got better and better, you got closer to the order filler. As you got closer to the order filler, you got an edge. That edge meant nothing to us because we were executing orders, and our clients wanted fills, not 2 ticks. So that's my feedback.
That's awesome. Really appreciate the deep insights you can get, Pax.
There's one thing I wanted to say great comments, Donnie and Mark. Mark, this is a great point, and it goes. When Mark had, or Danny, because they both had huge business, if I'm sitting there doing nothing and I would lean over, the edge of the pit and just talking, but I'm watching everything and I'm listening to everything. I'm wa- I'm watching everybody, and I'm in the pit, and I'm listening to everything going on in the pit. But I'm also watching the desk because that's where the business came from. When I saw Mark walk over to Wally, and you can see the look in his eye, you knew something was going on. You knew something was going to happen. Whether it was the SPOOs or it was going to be the Nasdaq, it was going to happen. And I was ready to react to that because I can see it now. I knew what everything else was going on in the pit around me too, but I saw those things. And that's one of the and I knew what my position was. I knew more than I had to try to anticipate what they were doing. All of these things are so very, very important. And there's one more point I think, and Mark made this too. The algorithms that run the market, the HFTs and the algorithms that run the market are designed to create profit. They are not designed to absorb risk. On the trading floor, the independent trader or retail trader nowadays, right? The independent trader was designed to create profit for sure, but also absorb risk. We absorb risk. I absorb big risk. That was part of my job description. That is part of what made the pits a very, very, very uh, um, uh, efficient marketplace in the face of what seems like just incredible chaos. The emotions and the feelings and the physicality of everything that went on there was so great that you really had to be a self-possessed person in order to be an effective trader, period. And I just wanted to add those two things. So I apologize. I'll shut up and let everybody else talk. Thanks.
No worries. No, we appreciate it. Mish, want to pop in here?
Yes, sorry for my froggy voice. Well, number one is I learned that being in an environment with so many different kinds of people to not be judgy. I mean, that was like play nice with others was really key. And when you're in that type of physicality with so many different people from so many different walks of life, from the fireman type that was just mentioned to the guys that were coming out of Harvard Business School and learning to trade on the floor, everybody was there for the same reason and was incredibly cooperative. So I had a little bit of a rose colored glasses experience. Maybe it was because I was a woman, but I don't think so. I think it was just because I was really open to get something from everyone, right? Whatever that was. And of course, there were the people to avoid. Number two is because of the physicality and my lack of being able to be in there when things were gone nuts. Um, I was really able to learn from stepping outside that the moments when the momentum would build up would match what I would see on the point and figure charts. The moments when the momentum dried up and you'd see the look in people's eyes that there were no more buyers coming in and the pit was heavily long on the chart turned out to be a good resistance level. I got a first-hand, full-on 5 cents experience of price, momentum, and technicals. And it was really, I think, what molded me and still molds me still as a trader that has been off the floor, obviously, for a very, very long time. But I spent 14 years down there. I also learned that everything cycles, and in particularly commodities, which is why I find it somewhat amusing when I'm getting asked constantly that, this has to be this top in sugar when it's having a parabolic move. I saw emotional parabolic moves. I traded emotional parabolic moves that defied logic, that defied charts, because once you get that type of an emotional reaction to something, it keeps going until one day it cycles to its top, and that's that, and you know it. And I also learned that if something is cycled to its top and comes down, there's a great opportunity to go short. And I also learned that once something goes dormant, it's time to move on to something else. And so this was really the foundation of everything that I'm with now. I learned that, yes, there is always going to be a fundamental component And it's fun to look at that fundamental component. But basically, what happened on the floor ruled. A lot of people mentioned the order flow from the desks. I wasn't on the top step, but I was on the step below the top step. And I worked for a while as a clerk in the oil pit. So I got to really experience jumping up on the stool with two phones on either ear, getting the orders, talking about what was happening. That was also a great experience because I got to talk to the institutional investors. And I learned that the institutional investors had the order flow, but they were very much dependent on what was happening with the locals or the retail investors, as Pax just said, what we're called now. And all of this really taught me to just think differently and not necessarily really worry about analysts and things like that. I mean, yeah, we watched inflation go crazy. We watched Volcker come in and squash it. We watched the dormancy of the many of the commodities in the mid 90s. But I left after that, 94. But we were also there for the crude oil in the Persian Gulf War. So it's like expect the unexpected, watch the momentum, watch the price, learn something a little bit about charts. And then I moved into more longer term charts because I wanted to have a trend to trade around. And I also learned how to trade around a core position. So I was very much a day trader back then, but I would have a core position through spreads, which is an interesting thing that I don't do anymore. But it's basically you would be long the front month and maybe short a back month, or the opposite. You'd be short a front month and long a back month, depending on what was happening in terms of your viewpoint of that commodity. So, it was an unbelievable experience for me. I was treated fairly kindly. I I was constantly being helped. And also the other thing I want to say is in the 14 years I was down there, I didn't know anybody's politics. I didn't know if they were Democrat or Republican. I don't know who they voted for. Nobody discussed it because everybody was there for the same reason, which was to make money. And lots of people, I watched people be carried out. I watched people make fortunes. I watched myself go from a very poor girl when I went down there. I was there before you needed to have a certain amount of net worth to be able to trade. Believe it or not, it was the last bastion of capitalism, is what pure capitalism is what I like to say. And I watched my wealth grow. And when I had a bad time, you know what guys tell me? Don't think in scarcity, think in abundance. Go out and buy something really nice for yourself. If you think rich, you can act rich. And I used to think that was so silly, but it's so true.
Love the message there, Mish. All right, Mr. Top Step, I know that you wanted to get some thoughts in here.
Thank you very much, Wolf. Just to back up a little bit, I'm sure there's people that are on here that know about pit trading, but the process really is just bidding and offering with your hands, right? And that's what the guys in the pit did. Now, Mark was talking about it. We both did run big trading desks, and I didn't trade all the time. In fact, I had a different desk. If I was going to trade my own account, I would have to go to a different desk that was elevated up a little bit. So I wasn't kind of what they call dual trading, which is illegal. Now there was a rule back then when guys in the pit were filling orders. It was called dual trading. They could actually trade their own accounts while filling orders, and I had a big problem with that. Now, as far as the way the floor was back then, and obviously we're dinosaurs in a big world now. The floor was the source. Everything that happened economically, every piece of news, every level, everything came from the trading floor. So the transition was a difficult thing. In fact, a lot of guys that left the floor, and I'm sure a lot of the guys that are in here know about this, that said that a lot of the prop trading firms in Chicago didn't want to hire any of the floor traders because of, quote, their bad habits. But real quick, I think that there was two types of traders down there. There were the guys that kind of followed technical analysis, and there were guys in the pit that did. They followed levels. But I think Mark and Pax would probably agree with this. A lot of guys in the pit were just flow traders. Big orders come in, they were short. They'd start to press into it as the order filler was selling, or shit, if the order was big enough and somebody winked at somebody in the pit, the guy's got 800 to sell. and somebody mentions, hey, there's a big order for sale over there. Why wouldn't you jump on that? You sell 50 lots for yourself. The market goes down. You try to cover into the end of that order. A lot of that went on. But one of the things that I think is funny when Mark's talking about Wally Posner, I was filling a 200 lot for the pit bull. Now, back then, remember, it was $50,000 a point for a 100 lot. So a 200 lot's $100,000 a point. And I was looking into the pit. Pitbull had given me 200 to buy. The S&P is cranking up here on the upside. And I remember looking into the pit, and there was like two or three guys that I could have given the order to. And Wally's guy looked at me and he's like, "Hey, D-boy, 200 offered at this price." Now, Howie knew that I was going to buy 200, and I looked at him. I said, "Buy the 200." And all of a sudden, a couple second delay, and then the clerk comes back and he gives me a U in my hand, which we all know what that is. That's an unable, right? And now I got the pit bull in my ear, and he's screaming at me. And the clerk says, "Hey, there's another 200 offered at this price." And I say, "Buy him." And same thing, get the turnaround. The S&P is about 30, 3 ticks, 4 ticks higher. Now remember, it's $100,000 point, right? And the next thing I know, I said, Pitbull, we got the order filled. It was a horrible fill. Now, this is nothing against Wally. We're friends. So I want Mark to know that. But anyways, I'm talking to Pitbull on the phone, and this is really what my desk was about on the floor. And I think Pax knows this. I think, everybody that knew me down there. We were down there to protect the customer orders. There was so much front running going on down there. So I'm on the phone with the Pitbull, and he's screaming at me. And I said, I want to get him. And Pitbull says, "You go get him. I'll pay the fine." I go over to the side of the pit. I do a little Irish jig. Wally turns around. He comes blowing out of the pit. I pop him square on the side of the head, knock him to the ground. And he's got a 300-pound clerk called Brad that comes up behind me, and he puts his arm around me. And now Wally's pounding on my head. Now, I got a $10,000 fine, and I got a couple weeks off for that. But I'll tell you what, when I look back on that, I'd do it again if I had to. Because Pax was in the pit. He was trading his own account. But he knows as well as I do that, when you don't want to be on the other side of a big order. If you're getting the tail end of it, that's great. But I think this is kind of where everything kind of comes together. When the CME decided to go electronic, there was a lot of talk about, making it cleaner for the customers and making execution better. And they did in some respects. But the other part of it that I don't think that they knew, and I don't think the customers or the floor knew when it was shutting down, is that 90% of all the volume that we see on the boards now is algorithmic trading. So from one hand, the CME did what they thought was right for the customer, and then the next thing they did, they opened the door to Citadel and every jump trading and every big algorithmic trading firm out there to run over the customers. So one way or the other, the customers get run over.
That is a wild story. That's crazy. I appreciate you sharing that with us. I had never heard of anything like that quite happening on the floor.
Danny, that was awesome. I remember you popping another guy too. That's still one of my best stories, or one of my favorite parts of that. That was great. The emotions ran high, man, and protecting your business, protecting your deck, to front running and to dual trading, which all that drove me crazy.
Well, I mean,
it was just great.
Did a couple guys in the NASDAQ that filled orders go to jail because of dual trading?
Yes, yeah. Two
Yeah.
guys, they stood right behind me too. They
Yeah.
stood right behind me. Half on 50, sold. I'm out, but I'll pay 30.
Yeah.
No, not for me. You won't.
No. No, look, it's not really. I'm not really proud of it. You know what I mean? It is what it is. But again, I think what Mark was alluding to, the trading floor was a place where your dad could be a plumber, your dad could be an electrician. You may not have gotten to go to college, but you could end up on the floor. And I remember walking on the board of trade floor when I first started, and I was just out of high school. I weighed 185 pounds, and I wanted to get in there, you know. And I walked on the floor, and I remember looking at in the grain room and looking up at the ceiling and seeing all these guys pushing and not actually fighting, but I knew they were making money, and I told myself, this is it for me, you know. And then when I got to the S&Ps, and it was always kind of this way, like when I was over in the bonds, you know, the bonds were huge. There were 600 people in the bond pit. And, you know, you walked on the floor, I swear to God, and I say this all the time, maybe you'll call it BO or farts, but there was a smell of money on the floor. You just knew there was big money coming down the pipe. You know, and another thing, real quick, I'll finish it by this. I'd love to tell this story. I'm not going to tell it all right now, but we used to do business for a Saudi Arabian count. It was a royal Saudi family through a company called Capcom. And I think Mark would remember it. They used to come into my desk every morning, the 2 or 3 weeks leading up to the 1987 crash. And they would get on the phone and they'd say, "Hello, Donnie, this is Bashir. How are you today?" And I'd say, "Very good, Bashir. How are you?" "Hey, Donnie, what do you think of the S&P today?" And I'd say, "Well, they're going to go down a little bit in the first part of the day, and then they're going to go up in the first part, and the last part." He'd say, "Okay, please sell 2,000 big S&Ps on the open." Now, remember, 100 lot is 50,000 a point. So 1,000 lot is $500,000 a point. That's from that right now in the S&P. If it was back then, it would be 41 to 4110, 4110 to 4111 is $50,000 per 50 lot or 100 lot. So when I'm putting a 2,000 lot into the pit or a 3,000 lot, a 2,000 lot is $1 million a point. I would come in and do those orders on the open, and there was so much thievery going on. You remember that, Pax? Were you around back then? Mark, you remember. But
I wasn't there then, but I do remember.
I remember.
and what happened real quick, they call back on the end. They remember when they caught Jimmy. Anyways, I'll finish it like this, you know. And I love Jimmy Place too, but at the end of the day, they'd come back and they'd say, "Hello, this is Punkage," and I'd say, "Hello, Punkage. How are you? What do you think is going to happen on the close?" And I'd say, "Well, I think they're going to rally." And they'd say, "Okay, in this case, Denny, please buy 2,000 contracts, buy 3,000 contracts." Well, one day when I put the order in, Jimmy Place turns to me, "You can't fill 2,000 big S&Ps in a minute. You can't do it." So he had a special leeway that we would give the broker a couple extra minutes. You know, we would get the order in before the close, obviously. It would be maybe 5 minutes before. But anyways, the order goes in the pit, and I I see Jimmy, in the pit. He's got his arms up, and as soon as he put his arms up, the S&P goes bid, right? And then all of a sudden, I see him buy 50, buy 100. I can see him putting his hand to his forehead, in a fist. That means he bought 100. He buys another 100. And then right before the allotted time comes in for him to start filling the order, the phone rings. It's the guys from London. It's, Punkage. "Hello, Danny. It's Punkage. Please cancel the order." Remember this, Mark? And yeah,
Yes,
so I look
unbelievable.
into the pit and I go, "You're out on the MOC." And Jimmy looks at me and goes, "What the fuck are you fucking talking about? I got 350 of these things done. What are they? 400 of these things done." And they go through a competitor on the floor through Dean Witter and they sell 2,000. Jimmy loses $1 million in a matter of 20, 30 seconds. And the funny thing about it, he comes crashing out of "We're going to London to kill these motherfuckers." And remember that, and he goes, "We're going to bring our fucking machine guns with us. We're getting them all." And he starts kicking the phones off the desk, right? And then the funny thing is, the Dean Witter drops the order off on my desk, and I look at Jimmy. I go, "Jimmy, you're not going to fucking believe this. They went through because they knew what was going on. I mean, there was
gazillions and gazillions. One day I met a guy on the L coming from Oak Park down to Chicago. Never took the L. Never took the L in my life. True story. Anyways, he's looking at me, and I'm a little hungover Thursday night, Friday morning. I'm like, ugh, I'm stuck on the L for whatever reason. And he comes, I see him kind of looking at me. He walks up. He says, "Do you mind if I sit down?" And I said, uh, "Sure." And he says to me, he says, "You're Danny Riley, aren't you?" And I said, "Yeah." I said, "What's up?" Like, what the fuck? Leave me alone. And he says, "Well," he goes, "You're not." He goes, "I got a story to tell you." He says, "A buddy of mine about 2 months ago told me that I should come down to the trading floor and get a membership. So I applied for a seat." I said, "Great, great." So he said, "Yeah, I trade in the S&Ps." And I said, "Great, great." He says, he said, "I got to tell you the story. My buddy told me that I should hang around behind your desk and wait for these big orders to go in." And I was like, "Oh my God, now I'm going to hear this story." Right. And the kid goes on to tell me that over like a 2.5 week period, he took his $30,000 account up to 150,000. And once he got to 150,000, he started trading 30 and 40 lots off those orders and ran it up to $450,000. A kid that just had never traded in his fucking life catches on to something like that. But look,
Wow.
In the end, I'll just say it like this, and I think that there's something to be said about this. We all know guys that made millions and millions of dollars down there. Tom Baldwin. There are guys in the S&P pit. The Borsalinos, they made millions and millions of dollars. And that's all great, I mean, and I didn't make that kind of money until really, really late in my career. But the thing is that what I've learned about this over the years is that as much money as you may make, and these guys down there, they must have thought it was never going to end. Vacations, cars, mega homes, taking everybody out, spending money like it's going out of style. And now 90% of those guys that made a lot of that money, they're driving trucks. Jimmy Carey, who did all the Corzine Goldman Sachs bond business. I grew up with the guy. He inherited his membership. He's a forklift operator. Kenny Dalkey, who filled in the bonds for years, he's delivering flowers. I mean, these guys they didn't have the foresight to know that, hey, put a little bit of money away, invest it somewhere, do something with it, and that's really the hard reality of this in the end. I mean, people that made a lot of money down there, it was all fast money, and I think a lot of them just ended up broke. I mean, like even Jimmy Place.
Well, I still talk to Jimmy.
Yeah, he's a great guy. But
great guy. He's struggling along. Yeah, that's a great point, Danny. And great stories. I wasn't a part of them, but I remember them. I've heard them, and I listened to them, and I paid attention to them, and they're so really very important, and they inform everything that goes on now in some way. But I say that about my own career. I can talk firsthand about making millions of dollars and winding up driving Uber because I did it, and then tried to make it back and chased it, chased money, right? Trying to like we do on a trade or just bad month or bad week, chasing money, and just making it completely worse until I ended up driving Uber. But the point is you slow down. This is a marathon. Build your career on a solid foundation. And no matter what storms come, you'll be okay. We thought it would never end. I didn't know any better. My career at the time, because money came so fast. The right place, right time sort of thing.
One of the things I'd like to say, and Mark, I don't think you were around as much for it. As as pit trading shrunk and more contracts went on Globex, right? The only people that survived on that floor were the guys that did futures. The only guys that survived on that floor. They either moved into options trading or they moved into options execution. And I'll be honest with this. I took that $10 million hit in the flash crash when a fund blew up at my desk, and a $100 million fund and blew $90 million fund and left me and blew up when he tried to unwind a 2,000 lot put spread And I get this clerk at the end of the desk telling me to come on over. You better talk to me about this. I look at this thing on the floor, on the desk. I say, what the fuck is this, you know? And he says, oh, Jonathan jammed this order through the desk. I said, we don't even have give up agreements for this guy. He said, well, you got a bigger problem than that. He said the fund was 90 million and he lost 100 million. So I got stuck with a 10 million fucking dollar loss for real. All of a sudden, out of nowhere. And we always had a rule during this kind of stuff that when things were hectic and things were blowing up, you want to take less orders. You don't want to take more orders. You don't want to take bigger orders. You want to take less orders. And you know Troy Merce, you know, I gave Troy Merce all this business, and anyways, $10 million loss, and I'll tell you exactly how I got it back, and it wasn't trading. The pit bull who I had tried to help after he started not being as sharp in trading S&Ps, I started talking about a crude oil options trade when crude was trading like $20, 25, $30. And I said, Marty, I said, I want to buy the $30 crude. I want to sell the $50 crude. He says, what do you fucking know about crude? Over the next 2 years, the pit bull became the world's largest independent crude options trader. He was an options trader by trade. And he was trading anywhere from 30 to 100,000 crude options a day. Yeah, 30 to 100,000. And then when crude vol jumped, he calls me up at the desk and he says, listen, he said, send me some account forms. I want to do my business with you. He said, I want to start trading crude S&P options. From 2014,
But,
24.
Mr. Topstep, we are running a couple minutes over. I do have another space that's starting at the minute. So I'll just let you wrap up here, and then we're
Okay,
going to my
well,
next.
Oh, I want to hear this.
From 2013 to 2018, he traded 40 million open outcry CME S&P options through my desk.
Holy smokes!
So there's the end of that story. And I'll just finish it by saying this: not very many people, if anyone, ever gets to take a $10 million hit and make it back down there. And I looked at my desk. I looked at my desk one day and I said, you know what? We made all the money back. I'm leaving. I'm going to Delray Beach, Florida. And that's how I ended that. I never went back to the Chicago Mercantile floor again. I had no desire to. So sometimes it comes by working hard and doing the right thing, and that's what I did.
I want to, Danny. I want to hear. I want to, and we'll talk off record or maybe next week. But I want to hear how you dealt with that $10 million hit. What that day was like, or the weeks after. You know, so many of us deal with losses.
Maybe it's a good topic for the next space. I think actually we're doing this a week from today. But yeah, we'll.
Yeah, I think we definitely, Pax, we can use that for the next one. But I do got to get rolling into the next space now. So I really want to thank the panel for being up here and giving some amazing, amazing stories, insights. I think a lot of people enjoyed this today. I had a great time. Thank you, Pax. Thank you, Mr. Topstep.
You got
Thank you. Yeah, Mr. Topstep.
Thank you.